CNBC TV 18, celebrating 15 years of leadership.
Our top story tonight, volatility rules the roost on Dalal Street as bears continue to chip away. Markets end the day with marginal losses after yesterday's bloodbath. Nifty manages to defend 8100. Mid-caps outperform.
Crude oil prices stage a comeback. Brent crude recovers after slipping below the $50 a barrel mark. European markets also rally as the Eurozone enters into a period of deflation, triggering hopes of a stimulus from the ECB.
People are dead, many more injured as gunmen attacked the offices of satirical magazine Charlie Hebdo in Paris. French president puts the country on high alert. He terms the shooting as a terrorist attack. The gunmen still at large.
ING Vizia receives mixed response from its shareholders over its proposed merger with Kotak Mahindra Bank. Many employees who also hold shares expressed concerns over the swap ratio at an extraordinary general meeting.
No clarity yet on the auctioning of 3G spectrum. Telecom Commission rejects the telecom regulator's proposal over pricing, asks the regulator to clarify on the formula and notes differences between the internal panel report and the final recommendations.
Heineken moves to strengthen its hold on United Breweries, approaches the lenders to United Breweries to directly buy more stake from them. That's another exclusive.
Delight and despair for DLF. The Supreme Court allows the company to make staggered payments of the 630 crore rupee penalty imposed by the competition watchdog CCI. Flat owners that had dragged DLF to the CCI for one of the projects moved to Apex Court asking DLF to repay their registration fee.
Come April 2016, every company with net worth of over 500 crore rupees will have to prepare two sets of accounts. Will it hike costs? A special report on the impact of the new accounting standard coming up.
In India, the growth optimism went from 95 to 98%. Globally, it dropped from 43% in the third quarter down to 35% in the fourth quarter.
Indian businesses are the most optimistic in the world, says a survey by accounting giant Grant Thornton. But many believe red tape the biggest impediment to growth. A massive manhunt has been launched in Paris to nab the gunmen who stormed the offices of a French satirical magazine, killing at least 12 people.
That's right. The French president has called it a terror attack. No group, however, has claimed responsibility so far.
So, what's happening with the world? They're killing cartoonists, they're killing journalists, they're killing children. Anyway, that is one of our top stories this evening. Good evening and welcome to India Business Hour. To kick things off, let's tell you what happened on the last street today. A volatile session for our markets after yesterday's carnage. There was a sharp decline in the last hour of trade, but some of those losses were paid. Nifty lost about 25 points. It's managed to defend the 8100 mark. That's the important part. Sensex, meanwhile, lost about 80 points. It's trading just below 27,000. Mid-caps once again outperforming, with that index closing marginally in the green. As always, Anut Singhal joining us for today's trading action. Anut, yesterday's carnage, the bloodbath can be attributed to global cues. What would you attribute today's volatility to?
Well, today was quite difficult actually, because if you see the intraday chart of the market, there were 4 or 5 occasions where the market tried to get into the green, and every time the market actually found selling right from the start up until the end. To be fair though, the Nifty managed to defend 8100 mark, though the conviction is missing, as is indicated by the bank Nifty. And even though the advance decline ratio was even and the mid caps outperformed, it didn't really look convincing. But let's talk about some stocks then in today's trade. First, the losers, because it was a down day. So you had ICICI as the biggest drag, down 3%, ITC was down 2%, and Tata Motors 1.5% lower. On the other hand, contribution on the upside came from unexpected quarters, really. You had stocks like NTPC 2.5% higher, Lever for second day running was up 3.5%, and biggest contribution actually came from Reliance, that was up about 2%. Metal stocks had a weak day though, second day running, and that's one space which is quite clearly in a bit of a bear trend. So stocks like Hindalco, NMDC and Tata Steel were all lower in trade. Oil and gas, that's one space which has seen quite a bit of fall. Today was a bit of a mixed bag. ONGC saw some bargain buying, value buying, whatever you may want to call it, 1.5% higher, but the other two, Cairn and Gale, were still lower, down about 2.5%. In the mid-cap side, there were some big winners today. A lot of high beta names did well. Suzlon was up 9%, Jubilant was up 10%, Ashok Leyland clearly has been the stock of this month so far, up about 5% in trade today. And on the mid-cap side, in terms of losers, you had some high beta names again. Parshana Developers down 13%, IRB down 4%, and PFC down 3.5%. So the day after was quite okay for the market. Let's see how the next few days pan out, because as of now, it looks like the market is still a bit nervous and still a bit weak.
It somewhat depends on how badly global markets respond and how the news out of Europe plays out, because in Europe you have the Greece news. You also have the expectation that the ECB will do some form of quantitative easing in the near future. There's a concern of Greek exit. Then you could have that plus some hawkish details coming out of the Fed last meeting minutes that come out tomorrow. If you get a combination of those factors, you could get another 5-7% pullback in Nifty quite easily, and therefore you could dip below 8,000.
There's no reason to be spooked. I think it is not out of the ordinary that we get corrections along the way. We had a pretty much straight line market for 2014, so I think 15 is unlikely to be straight line. There will be more volatility, and I think what we are seeing right now is just one of those bouts of volatility. Globally, I think there will be these concerns that will emerge from time to time, and whenever the global trade moves from disinflation to deflation, it will hurt India. I don't think India's macro is past that point where the global picture will not matter.
All right, let's turn our focus to commodities now. Crude oil prices are trying to stage a bit of a comeback. Brent prices slipped earlier to $50 a barrel. This is the first time since May 2009 that prices have been at that level. However, now there's been a recovery with Brent getting back above the $51 mark. So what's the road ahead looking like? Hear out this view from Citigroup.
People are still bearish on oil, but I think you need to remember, cast your mind back to 2008, 2009, when the world really did feel like it was coming to an end. And we briefly went below $40 in the oil market. I mean, do the oil markets now look as bad as they did then? No, they really don't. I mean, demand is doing okay. What has happened here is a supply story and a surprise move by OPEC where they kind of got out of the way. So we think that oil prices are in the process of finding a bottom down here.
No bottom in sight here. That Citigroup of the view, we're perhaps not going to see crude at $100 a barrel anytime soon. Here's the other big global story, a tragic one. 12 people dead, many injured after gunmen armed with AK-47 rifles attacked the offices of French satirical magazine Charlie Hebdo. Have fled the scene and are still at large. French president has called it a terrorist attack and raised the terror level to its highest level. The magazine's editor and some cartoonists are reportedly among those dead. The magazine had been the subject of violent attacks in the past, this after its publication of cartoons of the Prophet Muhammad. Its offices were firebombed in 2011. Recent threats had also been made against it and other media groups.
This is a terrorist attack of exceptional barbarity. Those responsible for the attack are still at large. Action is being taken to find the perpetrators of the attack. We are doing everything possible.
It is a terrorist attack. It is a barbarian attack, and of course there is it is an attack against the media. It is an attack against freedom of the media, an attack against France, and I think it's an attack against all democratic values that we share with a number of countries. Several of them have already showed their solidarity. We have just received messages from the President of India, the Prime Minister of India, and we are of course very grateful for these messages.
An attack against freedom of expression, against France, against democracy at large. CNBC's Stéphane Pedrassi filed this report from Paris a short while back.
The national security alert system has been raised to the highest level with additional police and military resources for public places and public transport in France. Newspapers, television and radio also in the French capital received extra police protection today, and all extra school activities have been cancelled until further notice. It's one of the first decisions that have been made by the government, which early in the afternoon hold an emergency security meeting. Ahead of the meeting, the French President François Hollande made a quick statement in which he called the event a terrorist attack. In a tweet, Hollande said that we are united in this country, which will know how to react to this attack. Meanwhile, according to the latest data from the prosecutor's office, 12 people have been killed in this attack in the morning. At least 2 gunmen opened fire using automatic weapons in the newsroom of the satirical newspaper Charlie Hebdo. It's not a mainline newspaper. It's a satirical newspaper which potentially has plenty of enemies. It's not the first time that the magazine has been the target of an attack. Back in 2011, the headquarters was firebombed after publishing some cartoons joking about Muslim leaders. Charlie Hebdo has published this morning a tweet before the attack. It was a cartoon of the Islamic State militant group Abu Baghdad al-Baghdadi. But of course, it's too early to draw some conclusions about who or what organization could be behind this terrorist attack in the French capital.
Okay, so high alert in Paris there. Let's move on and see how global markets are doing. Markets in Europe have been edging higher on Wednesday, with investors anticipating more stimulus by the European Central Bank after new data showed that the Eurozone has slipped into deflation for the first time since 2009. So we're seeing some pretty smart gains there, almost 1% up on the core markets in Europe. Across the Atlantic, a check on Wall Street as well. US stocks have been advancing after positive data on the labor market, and also as investors bet that minutes from the Federal Reserve will signal ongoing stimulus program to continue. So about a 0.5% gain on the key American indices as well. Nantara?
Back home, Kotak and ING Vyasa Bank held meetings with their shareholders to get approval for their proposed merger. While Kotak faced no opposition from its shareholders, the same really cannot be said for ING Vyasa. Many employees who also hold shares were not in favor of the proposed merger. Purnima Murli, with her busy day tracking that EGM, now joins us live from Bengaluru. Purnima, what exactly are small investors as well as employees of ING worried about?
Well, today's ING Vaishya's EGM lasted for over 3 hours. Majority of the shareholders were also part of employee union, did raise their concern over the merger. Their primary concern was job security. They do not have the document of MOU that was actually signed, so they want the ING Vaishya management to tell them the MOU details so that they basically want their job secured. They are afraid that things might change post the merger. Their second concern was the share swap ratio, which means for every 725 shares of Kotak Mahindra, every share of Kotak Mahindra, you get 1,000 shares. So they basically want the share swap ratio also to be excluded. And they also did protest today, as before the IGM, raising these concerns. They want the tri-party agreement between ING Vaishya, Kotak and the employee union to be signed, basically expressing employees' interest and meeting their demands. Let's listen into what the employee unions had to say post the EGM.
The interest of the employees, who are 10,000 in number, have to be taken care. The big stakeholders are employees and officers here. This has totally been neglected. It's a failure on the part of ING Vaishya Bank. We have asked for a MOU copy. The copy has not been shared. What is inside the MOU copy? Is it something fishy? Is it something very sensitive which cannot be shared? If such a sensitive thing is going on inside, why should we not see it? As employees, we have every right to see what is going on inside. We are going to struggle. The employees' future is very much blink and may not be that safe in the hands of the Kotak Mahindra Bank. We are demanding a tripartite agreement with the Kotak Mahindra Bank. If they don't concede, we will go for further struggles and agitating, and we will not stop till we achieve that. And we are going to continue our efforts with our All India leaders to oppose this merger.
All right, moving on, the back and forth on 3G spectrum pricing continues. Telecom Commission has sent the TRAI's recommendations on pricing back to the regulator for clarifications. We're now joined by Malvika Jain for more details. Malvika, what is going on? There is a TRAI recommended price, the DOT recommended price, and now the Telecom Commission has rejected the recommendations by TRAI altogether. Is that so?
Well, if you remember, yesterday, the DOT's internal panel had recommended a reserve price for 3G spectrum 43% higher than what the TRAI had recommended. And now when this was taken up by the Telecom Commission today, which is an interdepartmental committee, they found it necessary to send back the recommendations to the TRAI, given that there was a huge variance in the price that the government wanted and that the regulator had recommended. So now, there is no clarity on when the 3G auction is going to be held and what the quantum of spectrum is going to be. Remember that the government had expressed its intent to auction 3G spectrum along with 2G spectrum in the month of February. But for that to happen, clarity is the need of the hour.
Thanks, Malvika, for joining us with those details. So there you go. We have to figure out what the government is still planning to do. The press release had made it pretty clear it does want to have simultaneous auctions, at least as far as the 3G spectrum also goes. The new April 2016, that's a new deadline for companies in India to implement the convergence with International Financial Reporting Standards, or IFRS, and that means every company with a net worth of 500 crore rupees and above will have to prepare 2 sets of accounts. Malvika, has that story.
Balance sheets like these may not be enough to satisfy Indian laws starting April 2016. That's the new deadline the government has set for companies in India to disclose their books of accounts in a manner that converges Indian accounting standards with International Financial Reporting Standards, or IFRS, as it is popularly known. The convergence itself will happen in 2 phases. In phase 1, which kicks in from April 2016, all companies with a net worth of 500 crore rupees or more will have to prepare IFRS converged accounts. In phase 2, which comes into effect a year later, April 2017, companies with a net worth between 250 crore rupees to 500 crore rupees will have to follow suit. To get the show on the road, the government is likely to notify 39 revised Indian accounting standards by mid-February and will also notify separate tax accounting standards before Budget 2015. But the fact that in a little over 12 months these companies will have to put together 2 sets of accounts has experts hoping a lot more clarifications come in soon.
The key question really is how would companies then, align 2 sets of books, particularly from, minimum alternate tax standpoint, because that's based on book profits, or from withholding tax. Now, some of these questions hopefully would get clarified before the first set of financial statements under IFRS come out.
Having 2 sets of records for the purpose of the taxation and accounting is not desirable. On the other side of it, we should have come up with some kind of tax changes, the changes in the direct taxes, for the purposes of the implementation of the Ind AS. But that's not going to be.
Global tax experts say that despite these concerns, the fact that concrete steps are finally being taken to in-IFRS convergence will play a vital role in pushing India's growth momentum higher.
It's a positive development for foreign direct investment. It's a hassle for, of course, many companies, but it's a worthwhile change, I think, because it'll make investment and analysis of companies easier for those companies that want to invest in India. It's a pretty significant change. There are a few carve-outs, but all in all, it's a positive step to make it easier for outside investors to analyze Indian companies' financial statements.
The other matter of concern is that the roadmap does not cover banks, insurance companies and NBFCs. And while corporate India waits for more clarifications, it will have to move quickly. After all, it has a little over 12 months to come to terms with the procedural and cost implications of maintaining 2 sets of accounts. In New Delhi, Malvika Jain.
Business confidence across the world has fallen at the start of the new year. That's the finding of a Grant Thornton global survey. But businesses in India are the most optimistic. 98% of India Inc. is optimistic about the economy. This is well above the global average of just 41%. Now, the global average is as low as that number due to lack of optimism in the United States, where business confidence has dropped to 59%. And in China, it's even lower at 22%. And in Japan, it's actually in negative territory. But back to India. Now, nearly 70% in India believe that red tape is the biggest impediment to growth. Here is the global CEO of Grant Thornton on the crucial findings of this survey.
Certainly from a business perspective, the changes of the new government are perceived positively both inside India and outside India. You know, as a global CEO, I travel around the world, and I'm hearing very positive comments in the U.S., in the U.K., in the Eurozone, and frankly throughout the world about what's taking place in India and the changes that are being made. We do a survey of thousands of business leaders from small and mid-sized and larger businesses throughout the world. We do it quarterly, and the results of business leaders in India are the highest throughout the world. They continued to move up towards the end of last year. And our last quarter results are even higher, 98%, moving up from 95% in the previous quarter. That's the highest business confidence anywhere in the world. In India, the growth optimism went from 95 to 98%. Globally, it dropped from 43% in the third quarter down to 35% in the fourth quarter. And that's based on predictions that business leaders have for their revenue and profits going forward. So in India, most business leaders are predicting higher revenue, higher profits, but in most of the other parts of the world, they're predicting lower revenue, and not lower revenue, but slower growth, and not as much growth in profits. So we're seeing decreases in major countries like the U.S., China, the Eurozone in general, and that's making everybody concerned. You know, a lot of the other statistics show the same thing. U.S. factory orders have dipped over the last few months. So there's a level of uneasiness, even though the economy in the U.S. is very positive overall. A lot of positive trends out there. The U.S. economy continues to be very strong. The U.K. economy is even stronger, and so we're seeing positive signs there. So while the business leaders that we surveyed are predicting less growth and less profit growth in the U.S. and in the Eurozone, and in China as well, slower growth and profitability, the economy remains relatively solid in the U.S. and even in China, where the GDP continues to grow. The bigger concern is the Eurozone and the impact of that. Nobody really knows, but it's been flat. Certainly in most of the Eurozone, places like France are even down. Concerns in Germany. So I think there's cautious optimism as we go into 2015, but very strong optimism right here in India. Clearly, there's a lot of money that wants to come into India, and there's positive changes that are encouraging that. These things take time, but the direction is definitely going in the right way. In terms of sectors, it'll be across a wide variety of sectors. Of course, the technology sector is the obvious one, but also pharmaceuticals, automotive industry. And I think we'll see it across a broad degree of sectors because there's opportunities for a very positive return right here in India, and the world is seeing that. And, of course, the world is seeking the right investments. There's a lot of cash sitting on the sidelines in the U.S., in the U.K., in the Eurozone, looking for the right investment.
All right, that's Grant Thornton there. Another CNBC TV 18 exclusive now. Dutch beer giant Heineken wants to have a larger swig of United Breweries. CNBC TV 18 learns that Heineken has approached United Breweries lenders directly to buy stake from them. Kritika Saxena is joining in with exclusive details on this one. Kritika, what have you picked up from your sources?
Well, at the risk of sounding corny, Heineken has been gradually taking larger sips of United Breweries Limited over the last 1 year. Now, the best option to do that, given the fact that the promoter shareholding is already at 75%, is to take in shares of lenders. Lenders have been selling their pledged shares that they have in collateral against the loan that had been given to British Airlines. They have shares of United Breweries Limited as collateral. So they have been selling in the open market. Now, just to quickly help you understand the promoter shareholding right now, Heineken holds 39.01%, and UB Group holds 35.81% in United Breweries Limited. Now, Heineken wants a larger control. They are already the larger shareholder, but they want a larger control over UBL, and that is why I understand from my sources that they are likely to ask the lenders directly for shares. The percentage depends on how much lenders are willing to sell, but I do understand that they are looking at hiking it up to at least 4 to 5% minimum. Again, it depends on how much lenders are willing to sell. 5.3 crore shares are pledged. That is how much lenders have currently, and that's around 53.88% of UB Group's shareholding. So there is a significant chunk that Heineken can grab in, and let's wait and watch out to see if lenders do agree or not. Heineken on its part says that they cannot comment on market speculation.
And the United Breweries stock up by over 7.5% in trade today. Thanks, Kritika, for joining us with those exclusive details. But with that, it's a wrap on this edition of India Business Hour.
Thank you so much for watching.
CNBC TV 18, celebrating 15 years of leadership.